Hey, welcome back to YT Finance, and today we are talking about how to get rich in the 2022 recession. So in this video, we're going to be talking about undervalued stocks that we can buy that are also recession resistant. So we're going to be going over three categories of what make these particular stocks not only undervalued, but recession resistant, which are companies that we want to buy during a volatile stock market environment. The first thing we're going to look at is we are going to be buying defensive stocks and defensive companies that are relatively immune to economic cycles. This would include healthcare companies, consumer defensive companies, and utility companies. Next, we want to focus on companies that have a very large economic moat, that also have a very impressive competitive advantage, while also being very financially healthy and highly profitable. Lastly, we want to make sure that their uncertainty rating is either low or medium, which means that these companies are very predictable in their growth trajectory, where we can estimate the future predictions of these companies with a high degree of confidence. And then we also want to make sure that these companies are undervalued right now, because if we end up going into a full-on recession and if the stock market crashes, these already cheap undervalued companies are going to be even cheaper. So when the economy returns to normal, the stock prices of these companies could absolutely explode, which could double, triple, or even quadruple your money. So in this video, we're going to actually take a look at Morningstar's defensive super sector portfolio to determine what 10 stocks that they identify are the best 10 stocks to buy right now, considering the current stock market environment. We're going to start off talking about a company that is closest to its fair value price, but still trading at around an 18% discount from what it should be worth, and that is Viva Systems, ticker symbol VEEV. I've talked about this company in a few other videos, and this company is a leading provider of cloud-based software solutions that is used in the life sciences industry. And if you want to see what Morningstar highlights for these various companies, you can see that they have 5 bullet points right here. It identifies the sector, which in this case is healthcare. It identifies their economic moat, and we want that to be very wide. And they also have their uncertainty rating as well as their price/fair value, which is 0.82. So ideally, if a company comes in at a price/fair value of 1, that means that the company is currently fairly valued. However, if this particular metric is not 1 and it's below a 1, it indicates that this company is undervalued right now, at least according to Morningstar. Right now, VEEV is trading at $220 per share, while professionals think the company is worth anywhere between $175 on the low end to $275 on the high end. And when we consult Morningstar, they think this company is currently undervalued by around 18%, because the company should be worth, according to them, around $275. So now that you know how this works and how we are going to price these particular companies, let's move on to another company which is even more undervalued than this company, and that is going to be Ambev, ticker symbol ABEV. This company is currently 21% undervalued according to Morningstar, and they are one of the largest brewers in Latin America. The current stock price is $2.80, while stock experts think that the company is worth anywhere between $2.30 to $5 per share. Morningstar has chimed in and said that this company is undervalued by 21% because the true value or the fair value of this company should be $3.50. So not only are you going to get a fantastic deal on the company if you buy these companies right now, because technically they are undervalued according to Morningstar, but even during a stock market recession or a market crash, these companies are going to be high performers in the future. And I also want to highlight that these price targets are 12-month price targets. The next company we're going to talk about is British American Tobacco, ticker symbol BTI. Their shares currently trade at $39 per share, while analysts think that the company is worth anywhere between $50 to $55. So clearly the company is trading at or even below a 21% fair value estimate according to a Morningstar director, because he thinks that the company is currently worth around $50 per share. So if you could snag this company up right now, you have fantastic future stock growth ahead of you, not to mention a decent dividend. Now, because I don't want to make this a dividend video, a lot of these companies actually do come with dividends, but I decided not to highlight that because I will be doing a dividend stock video at another time. Right now, we just want want to focus on the fact that they are undervalued right now and that they are going to outperform other stocks during a stock market recession, and these stocks could also help you build wealth over time. If you didn't know, this company is listed as one of the top tobacco companies in the entire world, and this is really what gives them a large economic moat, and I think there is good things ahead of this company in the future. So overall, this company presents a fantastic value. The next company we're going to talk about is GSK, ticker symbol GSK, which currently trades for $40 per share, while smart money thinks that the company is worth around $43 on the low end and $63 on the high end over the next 12 months. This would indicate, according to Morningstar, that the company is trading 23% below its fair value estimate of $54. If you didn't know, this company is one of the largest pharmaceutical companies by sales in the entire world. So clearly, I own this company, I like this company, and I think the company is undervalued because I agree with Morningstar on this particular company, and like I said before, I own it in my personal portfolio. The next company we're going to talk about is Roche Holdings, ticker symbol RHHBY, and one Roche share is currently around $41, while the low-end estimates for the price targets regarding Roche is $44, and the high-end estimates come in at around $55 per share. This means that Morningstar thinks that the company is 25% undervalued right now. This company is one of the best biopharmaceutical and diagnostics company on the market right now, and they have fantastic partnerships with a plethora of companies. So this is another fantastic company that has a low uncertainty rating, and again, it's in the healthcare sector, which makes this company a fantastic defense company. The reason why healthcare is under defensive companies and defensive stocks is because even if an economic recession happens and consumers and buyers stop buying and consuming, which throws off the whole supply and demand, which could cause a stock market crash, companies that are in the healthcare space are still going to make a lot of money during this time because there are certain things you can't live without. People aren't going to just stop using healthcare products or stop buying food at the grocery store even during a stock market recession. This is why companies like utility companies that offer electricity, natural gas, or grocers that sell food, or even healthcare companies are very safe buying opportunities during a volatile economic environment because people can't go without buying these certain products and services. Unlike other companies such as technology companies and growth companies, which should pull back majorly during either a stock market crash or an economic recession, and of course one could cause the other in this particular scenario, but they don't always go together. In my opinion, we should be prepared for both of these scenarios, which is why buying undervalued defensive stocks in the healthcare space, in the utility space, and in the defensive consumer goods space, these are going to be the best buying opportunities, which is why I really have to give a salute to Morningstar because I like this list a lot. I don't agree with all of their picks, but only because it wouldn't fit into my personal investing style. However, for you, you may really like this video because these stocks could truly make you rich during a stock market crash or a stock market recession, or at minimum, it will maintain the value of your portfolio and you won't experience any unnecessary losses. Moving right along, our next company that we're going to be dissecting is Gilead Sciences, ticker symbol GILD, which trades for $61 per share. On the low end, stock professionals think that the company is worth $56 per share, and on the high end, analysts believe the company is worth $90. And Morningstar has a fair value price estimate, according to their sector strategist, of around $81, which is substantially higher than the current stock price of $61 per share. Gilead Sciences specializes in various therapies to treat life-threatening infectious diseases, and this would equate to this company trading at a 26% discount from just their fair value. However, the other companies on this list are even trading at a greater discount than Gilead Sciences. The next company we're going to talk about is Medtronic, ticker symbol MDT. Medtronic is currently set to be worth $129 according to their fair value estimate by Morningstar, but the current stock price is only trading at $93. Stock experts deem the company to be worth at minimum $85 during a worst case scenario and $142 in a best case scenario over the next 12 months. However, this would still indicate that the company is trading at a 28% discount from their fair value price. And of course, this company is a medical device company, so they specialize in therapeutic medical devices for chronic diseases. So again, another healthcare company. These companies are really going to come in handy during stock market uncertainty or even an economic recession. So to be prepared, I think everyone's portfolio should already have certain healthcare companies in them already, because I think that entire sector is absolutely phenomenal, and I think it's going to keep growing, especially if you can get some blue chip healthcare companies in there. But for these companies in particular, these companies not only have a fantastic growth trajectory, but they're going to maintain or even build wealth during an economic recession. So please keep that in mind. At least put some of these companies on a watch list, because even though I mention a plethora of companies in this particular video, you still have to make sure and do your own research on these companies to make sure that these companies align with your personal risk tolerance and your investing strategy. The next company we're going to talk about is Zimmer Biomet Holdings, ticker symbol ZBH, which currently trades for $112 per share. This company manufactures orthopedic reconstructive implants, and Morningstar thinks that this company is undervalued because they have a $175 price target for this particular stock. Now, with that being said, there are some investors that think on the lower end the company is worth around $114, but in my opinion that doesn't even matter, because the current stock price is trading below their minimum price target. Imagine one of your investments surging by around 37% because the company is already undervalued. So again, this is a phenomenal company to buy. And also, if you've paid attention, the price to fair value ratio has actually continuously fallen, which is good news for us because we want to identify companies that have a low price to fair value ratio, because that means the company is extremely undervalued according to Morningstar. Now again, we do have to take these price targets by Morningstar and these fair value estimates and any price predictions on this channel with a grain of salt, because no one can actually predict the future. We should use these targets as general guides to determine what the stock price could be in the future, but there is no guarantee that these stock prices will come through to fruition, so please keep that in the back of your mind. These are just educated guesses. The next company we're going to be talking about today is none other than Imperial Brands, ticker symbol IMBBY, which currently trades for $22 per share. Just like a previous company we talked about on this list, this is going to be a consumer defensive company that sells tobacco products internationally. And according to Morningstar, they deem this company is down around 38% from the fair value of this company, which means that this is not even a future price prediction of what the stock should be worth. They're saying that this company should already be worth $36 right now. So overall, that is very bullish, and we should definitely keep that in mind. The next business that we have is going to be Anheuser-Busch InBev, which is supposedly trading 41% below their fair value estimate, and this company is literally the largest brewer in the entire world. And according to a Morningstar director, this company is drastically undervalued right now. This company has a ticker symbol of BUD, or ticker name BUD, and it trades for $53 per share. Even stock professionals on the low end think that the company is worth $52, which is very close to what it's trading at right now. However, this particular director from Morningstar says that the company is worth $90 per share. So this is not only fantastic news for future buyers of the stock, but it's also amazing to buy such discounted companies before an economic recession. Because if a recession or a stock market crash ends up happening, all of these companies are probably going to be even more discounted, which means the rebound on these companies are going to be absolutely insane. And that's where we're really going to see the doubling, the tripling, or even the quadrupling of our money in some instances. But always make sure to do your own research. And that about sums up this video. If you want to see a list of all 10 of the companies that we talked about today, they are on screen right now, numbered 1 through 10. And I'm just going to put a couple check marks next to the companies that I am very bullish on. So of course, we're going to have Viva Systems is going to be one of my favorite. We have GSK, which is one of my favorite. I also like Roche, Gilead Sciences, Medtronic, and Zimmer Biomet Holdings. Now, the other companies on this list that I didn't mention, it doesn't mean that they are not good companies. It just means that I don't like them enough to actually go and invest into them, but that's only because of my investing style. If these companies drop even more, then I would have no other choice but invest into these companies based off of a pure value play. So for more videos like this one, or if you want to see a dividend stock video in the future, remember to go and smash that like button right now, comment your thoughts down below on any of these companies, or what company you think should be on this list, subscribe if you are new, and I will see you in the next YT video.